this so that the students who get removed can rewatch this. And yeah, Saleh, you can start removing anyone who doesn't have the camera on 1 minute from now. So at 8:05, 8:06, you can start removing. So let's get started with the analysis for today. Okay, let me share my screen. Okay, let me know. Can you guys see my screen? Thumbs up, thumbs down. You guys can see my screen, yeah? Okay, lovely, perfect, thank you. Okay, cool. Let's get started. Let's do Euro USD. Okay, let's get started with Euro USD. As you know, if you've finished all the group sessions, we're starting a higher time frame. But I'm going to quickly breeze down to the lower time frame because you guys know by now what we do. Okay. And if you don't, then you should have finished the group sessions, the recorded Zoom calls. If you go on Discord, click on group sessions, you'll find out. Okay. So as you can see here, time back, we swept liquidity over here. We took this liquidity, and now there was enough money in the market for the market to push back up as we predicted. If you scroll back the Zoom calls, you will literally hear me say, Euro USD is currently in a very, has a lot of bullish momentum, a lot of bullish liquidity. This is an area of demand on the higher time frames. Euro USD will pinch this liquidity and push back up. I said this months ago, yeah? And this is what happened. Literally pushed up straight after. So now if we scale down to the weekly, what can we see? We can see that it's taken a lot of this trendline liquidity right here. All of this has been swept, as you can see, boom. And now price needs to come down to make a correction. Okay, it needs to come down to make a correction, and it's also fulfilled this weekly level of supply right here. Boom, tapped into it, as you can see, melted straight away. Now I'm going to tell you guys, I'm going to give you the anatomy of this analysis basically, yeah? So if I go to the daily, same thing. Whenever we're scaling down that quick, we just want to see, does the high time frame complement each other? Yes or no? And in this case, you can see they all complement each other. And we've got potential targets for later on, like this area here. Okay, even the area below it, but for now, this area, because this is the area that caused change of character that was right here on the daily, but we're very far away from this area. So right now, we can just use this as a markup just to have it in the back of our heads, but it's going to take a long time for price to get here. So what we're going to do is we're going to scale in. So let's say the 4 hour. You guys know we do top-down analysis every single time. And this is already analyzed from like previous Zoom calls anyway. So we don't need to do that all over again. You can just rewatch the last one. So over here, what do we have? Simple, clear as day, Wyckoff distribution playing out. But we need to identify, why did price react from this point right here, this highest point right here? This highest point, why did price react from there? Let's take a look and let's find out the reasoning as to why price chose to literally melt from there and take a dive. Okay, so we've got this midpoint over here. We've got this midpoint. Would this midpoint be classified as an area of imbalance on a high time frame? Let's see, let's find out. Let's go to the 15 hour just to see. Okay, or maybe the daily. Let's see what happened on a daily. On a daily. Okay, this was an area which looks like it could be an area of supply. Maybe let's go a little higher. As you can see, yep, clear area of supply on a 3-day time frame. Okay, on a 3-day time frame, we've got a clear. Sorry, you're asking me to start my video. That's for my computer. I leave that. That's calm.
Okay, no worries, no worries.
Well, you thought it was a troll that's using my name.
Yeah, just making sure, man.
Oh, a legend. This guy, top security guard. What a legend. So yeah, weekly. Sorry, it was a weekly level of supply. Tapped in, melted straight away from the 50% of the weekly supply level. As you can see, clear as day. Price tapped in, price melted. So now we know. Okay, cool. Overall, we are bearish. Why are we overall bearish? Simply because, never mind the orange lines, guys. You guys are advanced now to understand that what I mean by these orange lines. I'm going to get to it later on. So price broke this level here. Price literally went up, came down, high highs, high lows, lower highs, lower lows, sorry, which indicates that price is on a downtrend. Price broke this level, changed character on the weekly. What happens after changing character? Price has to pull back to the original place that it changed character from, which was this last LPS over here, the last point of supply. Tapped in, melted straight from there. So now if we go to the 4 hourly, we go back to the 4 hourly, what can we see? We can see the clear Wyckoff distribution schematic over here, where this was the UTAD price change character left behind, a last point of supply again. This is how we use higher time frame confluence, and we correlate it with our lower time frame confluences. Okay, we correlate it with our lower time frame confluences in order to find trades that have the best risk to reward setups. Now, people say, okay, cool, price from this point here to here is about what, 200 pips away. So are we going to wait 200 pips for this trade? You can. However, because it's a long way away, you can now buy the market. Yarimi University does not give financial advice. I can now buy the market back up into this last point of supply over here. And why would I potentially be looking for buys back up? Simply because this demand over here has failed. Okay, which indicates to us what? Retail were buying. This was their support level. Why? If we drag this back towards the left a bit more, what can you see? What can you see over here? This is retail's floor, ceiling, floor, ceiling, floor, ceiling. Okay, support, resistance, support, resistance, support, resistance, support, resistance. So because this is what retail was doing, we now understand that this area is not a valid area of demand. Why? Because it lies in an area of support. Because what the retail traders believe, once resistance is broken, that resistance now becomes support. And once support is broken, so please look, please pay attention to this, yeah? So imagine I'm a retail trader now. Let me just replay this, okay? For example, to here, just to really show you guys, okay? This is backtesting mode. Okay, let me put the camera somewhere here. Okay, so let me play the market right now. Boom, boom, boom. Price taps right here. Price taps in. As a retail trader, I'll be selling the market from here. Selling the market, stop loss above. And then I'm saying to myself, yeah, the next support level is here, this area here. Okay, this entire area here, because price stopped there before once, twice, 3, 4, 5 times. So this is the next area of support. So I'll play the market, boom, 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 boom. What happens is, it will give me hope. Probably hit TB or SL before, stop loss. That's -1. Oh, sorry. Retail don't calculate it in -1%. They're probably risking like 5% on this trade or whatever. You will get some retail traders that obviously risk correctly. But the overwhelming majority, they're just looking to ping pong this, basically buy, sell, buy, sell, buy, sell. So they're thinking, okay, damn, this was a fake out. So what did they wait for? They wait for price to come back down again. Okay, cool. They've got their momentum candle, they call it. They sell again from here. The stop loss goes above the high, and now the take profit still becomes down here. So play the market. What happens? Boom. They hit the take profit. They're thinking, damn, yes, lovely. We banked some profit. Now price touch support. Let's buy it back up to resistance. So they buy the market back up. The stop loss is below this area here. Okay, and the take profit is at this resistance level over here. And I want you to pay attention, guys, because look, retail will make money, but it's a generation of liquidity in order to impact their minds by thinking this strategy is infallible. All I've got to do is buy at support, buy low, sell high, and sell at resistance. Let's take a look at this. Boom, they've entered, stop loss gets hit. But their strategy is what? Support, resistance, support, resistance. So they're thinking, okay, cool, damn, it's all right, I'm still up in profit from this one because I'm up 2%. Okay, but I've lost, they're probably not even up 2% anymore, to be honest with you, because this trade they've lost. So now they think, okay, well, another fake out. Another fake out, they've missed this trade. There's not really a clear, actually, furthermore, yeah, they wouldn't have missed the trade, because after they see a bullish engulfing, a bullish candle, they enter because it's a momentum candle for them. This is how I used to trade, by the way, guys, yeah? So you enter here, your stop loss goes below here, take profit, up here, 1-to-1 risk to reward ratio. Look how dead that is literally, yeah? So boom, take profit gets hit. So now what happens again is they sell. They sell again at resistance, stop loss goes above, and the take profit back down at support. Stop loss gets hit. Okay, so now what happens is, okay, now they're waiting for something called a retest. Retail trades something called break and retest. Whenever resistance or support gets broken, it becomes opposite. So in this case, this was resistance, right? Whenever that resistance gets broken, that resistance to them is now support. So what are they looking for whenever price comes back in here? They are looking for buys. They are looking for buys. So they've got their buys waiting right here, and their stop losses right below the new level of support, which used to be resistance, and they take profit somewhere up there, basically, yeah? So let's wait for it, wait for it, wait for it, wait for it, wait for it. Okay. Boom. It buys. They're in the buys now. They're in the buys. Stop loss got hit. This is why we don't trade retail. So that was an example to show you guys why we are bearish, because what do we say about retail? Whenever resistance gets broken, that resistance now becomes support. Whenever support gets broken, that support now becomes resistance. So do you see now why we don't trade this level of demand? Why we wait for this demand to fail? Simply because it lies within retail areas of interest. This is the area that they're interested in taking a trade from. So now we can delete this because we understand, okay, cool, demand has already failed. There's more confluence that price is bearish. However, we understand that price, in order for price to move, it needs to make retracements, it needs to regather its energy, okay? So over here, what can we see? We can see a clear as day change of character after the Wyckoff distribution schematic has formed. We mark this out as a change of character. Here we are. We're 200 pips away from our POI, so what can we do? We can potentially look for buys back up. So this, I want to show you guys, this is more advanced now. This is more advanced, and I want to show you guys a deeper understanding into liquidity, okay? A much deeper understanding into liquidity. If I go on the daily time frame, for example, you have to remember, guys, there's traders are in the market every single day. If you enter from the wrong positions, your positions that you're holding will eventually become liquidity, like we say. If you're new, you won't understand this straight away. After you finish all the Zoom calls, and you go through all the Zoom calls, you will understand this, okay? So for example here, last week, this is what happened. Last week, this was the previous daily high, this candle right here, okay? Let me just delete this for a second. It might look a bit confusing, guys. Let me delete these limits. Show you from scratch. Okay, if I just replay this, for example, go back into bar replay mode. Okay, perfect. So this was last week. So you have to understand, this is the daily time frame. If you watch the OHLC video in the course, you'll understand candle anatomy, open, high, low, close. So from here, this is a wick. So from this wick to the body close is 52 pips. So what you have to remember is right now, people are 52 pips in profit. Okay, people that entered in the wrong position, they are now 52 pips in profit. This was on, which day? This was on the Thursday, I believe, yeah, Thursday, 9th of Feb, all right? Keep that in mind, remember, yeah? And then you got the next day starting now, the next candle. So those people that were in this trade from Thursday, they are now up 125 pips. They are now up how much? 125 pips. So now this daily candle has closed. So the top of this daily candle and the top of this daily candle is now liquidity. Okay, so whenever you see like a supply or demand area or an imbalance above daily candles, there's a high possibility that price is going to take the liquidity on the daily time frame, tap in, and continue in the same direction. Why? Because this is a lot of momentum, guys. This is a lot of data. Daily candles, daily data is a lot of liquidity in order for the market to move. Whenever you see a market, whenever you see the market make a bigger move, like a huge move, it's because it's taken liquidity on a higher time frame. That's why it's got, like, imagine you've got a car, a 3-liter car compared to a 1-liter car, which can travel more of a distance when visiting, you know, a petrol station once. One full tank versus another full tank. Which one will last longer? That's the exact analogy that I'll use. That is the example of lower time frame liquidity versus higher time frame liquidity. Whenever a high time frame liquidity is taken, price will move in that direction for a longer duration of time. Whenever price takes lower time frame liquidity, price will move in that direction for a shorter period of time. That's why we say, don't be ignorant to the higher time frames because you see, oh my God, I can enter with a 3 pip stop loss here. Yeah, you will be able to, but you're probably gonna get 30 pips out of it. Unless you're mad accurate and you fully got the higher time frame on lock and you're being realistic with regards to your stop loss and your risk to reward, and you're saying to yourself, okay, cool, I understand I'm entering from this very, very, very low time frame. However, I understand that the lower time frame bias says that there's still more liquidity on the higher time frame that needs to be taken in order for this major move to take place. So what I can do is I can treat that time frame for what it is, and then later on when the major liquidity gets taken, I can also ride that next wave. You have to start thinking like that. You have to start thinking like an adaptive trader and thinking in terms of case studies, create case studies for what you see in the markets and trade what you see. So in this case now, this was the previous daily high. Okay, so if I go to the next day, for example, boom, this was the previous daily high. This black candle, remember this bearish candle, the top of the wick, this was the previous daily high. And for example, this wick here was the previous day's daily high. Meaning what? There are sellers here, there are sellers here. There are people that are in trades from here, and there are people that are in trades from here. Well, let me just copy and paste that, to be honest. One sec. Here. So now, why did I mark out this blue zone here? Let's go scale down. I can't remember what time frame it was. Was it 15? Yes, perfect. There was an Asian high right here. There's an Asian high right here. There's also levels of supply here that we can consider. Okay, we can mark out for later on. But so far, there's an Asian high. I'm trying to figure out. I deleted the market. I'm trying to figure out if there was an imbalance. So there was something here. I can't remember. Yes, 2-hour level of imbalance. Okay, there's a 2-hour level of imbalance here, and there's an even smaller 2-hour level of imbalance between here and here. So this is an area that price can potentially come back to. If it fails, then it can come up to this level of supply right here. As overall, it's a huge level of supply, which is why we refined it to just this blue box here. And if it taps up and stops us out, no problem. And we're not going to enter aggressively from this small one anyway, because the stop loss is too much. It will be actually no, we can it's 8% pip stop loss, but we can risk 1% on this, and if it stops us out, no problem. We can wait for further distribution within these zones over here, and if it moves up higher, we're still not at risk because we're not traders that enter aggressively from the market. We're very calculated. We like to wait for price to show us its hands anyway. So the point I'm making is previous daily highs can be used as liquidity. Okay, previous daily highs can be used as liquidity. So I've got this marked out here. Okay, if I play the market, watch and you'll see what happens. Yeah, you'll see what happens. What happened? Price literally tapped in, took both previous highs liquidity, tapped into the imbalance, melted. So overall now, I've got an Asian low as a target that's been unmitigated, and that's where we're at right now in the market. Okay, well, the Asian low has been taken. Sorry, the Asian high. Okay, I've got an Asian high marked where, so this is where we're at currently in the market, yeah? So this level here, what can we find now? This is Euro USD. So now we're trying to buy the market back up. So if we look at the 15-minute time frame, we're going to see a clear as day order block right here. Very, 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 very clear order block right here. And we have an unmitigated Asian high right here. Okay. Asian high. We'll move on. Here we are. So now, this question gets asked a lot. Which order block do we consider? Always have options, but don't have ridiculous options. Sometimes you're going to see two order blocks that look very, very nice, very, very clean. For example, if I go to the 30-minute, you'll see a clear, I think it was a 1 hour, I think. Yeah, you see a clean one here. Okay, you see a very, very clean one here. In this scenario here, I would consider the 1 hour order block if price clearly breaks above this level here. Why would I consider that one over this one? Okay, because a change of character is what? A breach in the lower highs or lower lows or higher lows and higher highs in whatever trend. So in this scenario, we're in the downtrend. So, okay, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. This lower high here has not been breached yet. If this lower high gets breached, I'm going to take the trade from this level, or I'm going to use this as my POI, because this is the one that caused the change of character. Because you can, if you scale down time frames, this wick right here, you can consider this the point, another lower low. For example, if I go to the 15, you see, lower low, lower high, lower low, lower high, lower low. So it's that is a lower high. So I wouldn't consider. So for the 15-minute time frame, that's why I got this marked out, because for the 15-minute time frame, this is the valid order block for the 15-minute time frame. To me, this looks like the most valid one. However, on the 1 hour time frame, this would be the valid order block for me if price changes character here. Because if we're looking at just market structure, high highs and high lows, cool. Price can potentially come into this region here, okay? But I'm thinking of overall market structure. What has the cleanest market structure? You can see it clear as day in a 1 hour. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So I don't want to consider this wick on a 1 hour time frame, because I'm taking the 1 hour time frame for what it is, for what it's showing me. Right now, it's showing me nothing but cleanliness when it comes to what it's offering. So it's looking very clean. Very, 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 very clean right now. So these are the areas that I'll be potentially looking at for Euro USD. If I go to the 15-minute time frame, you can see this is a very clean area to take a trade from potentially. If price respects it and shows us its hands, I'll potentially put my SL below here. Let's calculate the pips on that. Around 8 pips stop loss with spread, commissions, whatever. Let's say 10 pips. Okay, and you can have your take profit at this Asian high right here. Nice little 1 to 16 RR trade. And if it taps into the 1 hour, I wouldn't take the trade straight away, simply because the stop loss would be what? 15 pips. So I would wait for potentially a 5-minute change of character within the zone if price respects it. And then once price change of character on the 5-minute, wait for it to leave another point of demand, enter from that point, and still target the same area. So that's my analysis for Euro USD. Okay, that is my analysis for Euro USD. And now if we zoom out and go on the daily time frame, we can see that overall we are still bearish until we break this trend. Don't marry your analysis and think to yourself and try and predict what's going to happen. Just use the data. Data shows you what price wants to do. Okay, don't try and figure stuff out. Just use what you can see and what price is doing, because price is telling you a story. You just got to put together pieces of the puzzle. Unless price breaches this high right here, we are still bearish. Price has to push up and break this high. We are now bullish because it's an extreme change of character on the daily time frame. So that is Euro USD. Let's take a look at gold. Let's take a look at gold. Okay. Now I'm still mad that I missed this trade from last time. You guys, who was on a couple of previous Zoom calls, you would understand my pain. But I was literally waiting for this imbalance here to get touched all along, and price literally melted it, touched it and melted for like 1,400 pips. Okay, so overall, I'm bearish on gold temporarily. Okay, overall I'm bullish on gold, but temporarily I'm bearish on gold up until this level here. This is an extreme target to have. Okay, and I'm only aiming for these lows if like crazy fundamental news comes out in terms of the economy and gold prices, like wars, etc., recession talks, and those sort of things that can affect the economy. So I'm still bearing this in mind, because they're saying that the recession, we're basically in the recession, but they're saying the recession is going to get worse and worse and worse. And there's talks of like China with the coronavirus part 2, COVID part 2, basically part 3, I think it is now. And I witnessed what happened in lockdown, because when we were living together, we literally saw the markets crash. So we saw the markets crash, but gold was at its all-time high. Salih, when gold, that's when it hit 2000, in it, lockdown?
Yeah. And like towards summertime, it started like really pushing up. I think it was just after April. So around like May and then June, it started like going up.
Tell them your experience, Salih, from watching the markets when COVID hit.
It was crazy because at that time, it was on like a parabolic run, like a proper bull run. And like obviously we were all like trading it and just buying, and literally you could have bought from, and this was even them times where it wasn't really trading with like the strategy we have now. We could have bought from anywhere and it would just, you'd wake up to a profit and it would just keep going up. It was a very, very strong run, which was crazy, but it made sense because when COVID hit, everything became cheap. And that was the best time to basically get involved.
Yeah. So yeah, whenever you catch a nice bull run or a bear run, it's amazing because you're literally just trading in one direction for so long. So yeah, over here, that's why I'm bearish on gold, because we got retail traders called as a triple bottom, mentioned on the previous Zoom call. So this is now extreme liquidity for me. It's not even equal, like it's 3 times equal lows. Okay, so that's why I'm bearish on gold from this level here. So that's the high time frame. So let's drop to the 4 hour. Let's see what the 4 hour is saying. So over here is the situation because we've got a change of character, we got an imbalance, we got another imbalance here in this area, and we got a level of supply. So we have to be very, very, very cautious with how we want to approach gold, because it's offering us clear bearish signals, but it's giving us 3 zones that we can get a potential reaction from. Okay, one of these 3 zones, either here, this first level of imbalance here, that top supply zone there, or this level of imbalance here, which is amazing for all of us. Why? Because we don't trade impulsively from one zone. If price taps here, we're not going to sell straight away. We're going to wait to see which zone gets respected and which area is valid for distribution to occur. So once this area gets fulfilled and distribution starts taking place, and we get another change of character, and then last point of supply, we can now look to sell the market back down. But up until price approaches here, we've got to look for buy opportunities. So what buy opportunities can we see here? Clear as day on the 1 hour time frame, we can see the Asian low has been taken, the Asian high has been taken. This order block is not valid yet. And I'm not going to say the order block is valid. Oh my God, no. I'm going to take the trade from the order block if price reaches this level here, because it will be a change of character. And I have to wait for it. So we've got a question mark there. I set an alert right there. That's what I do, guys. Set an alert right there. Boom, continue. Double click that. I call it XAU USD. Change of character. Just to remind me if I'm in the gym, if I'm outside, if I'm busy doing something at home, it will let me know. Price has changed character, so then I can look to set my limits from here if I'm busy, or if I'm on the charts, I can just enter the market straight away from there. After it's giving me a change of character on the lower time frames. So it's just a POI for me because I'm not going to enter with that big of a stop loss on a 1 hour time frame, especially for gold. So I would drop to something like the 15 to see if I can find anything. Okay. We got this level here, but I don't want to be too I don't want to refine it way too much. So what I'm going to do is I'm going to keep scaling in, let's say to the 10. So I would go down all time frames, like 14, for example, 13, 12, 11, just to find the cleanest possible here. So this area, I like this area here. This area looks nice. I'm not going to refine it too much, because I want to be very realistic at the same time. Okay. And so now, for example, if price follows this analysis and it meets, I would love to take this trade from here and potentially target these Asian highs for a first take profit. So this level right here, so just that Asian high right there, or slightly above for like a 1 to 6.8, 1.1 to 7 risk reward ratio. But overall, that can be a TP1. TP1, yeah, I like big risk reward ratio. So my overall TP, I would tap it right here. I would have my overall TP right here. Why? Because this high is the highest point before the imbalance. This high right here. Okay. So overall, the risk reward would be crazy, somewhat crazy, 1 to 12. But you have to understand momentum, sessions, etc. If you're up all the way after New York session and price is approaching this high here, take your profit or take off a good amount of it and let the rest run, because if after the New York session, what's going to happen is You're going to be slowly entering Asia, and then the momentum is going to die down. And now the entry for New York will become liquidity for Asia. You get it? So what you do is you wait, you take a lot of your profit here. You still enter the trade, keep your stop loss the same. But that way you've banked 80%, you're leaving 20% running. So now you've got 20% running to TP2 and you banked 80% at TP1. So that is what I would personally do for gold. Yeah, let's take a look at US 30. Okay, let's take a look at US 30. Again, just look at the monthly very quickly. I'm just gonna look at it just to see overall. Okay, cool. Let's approach the monthly level of supply within this zone here. Boom, it's tapped in. I've done this analysis many times before on the previous week Zoom call on a high time frame. That's why I'm just breezing past it. You guys can rewatch that. So over here, very, very, very similar to what we described before. What did we say, guys? Whenever price makes a huge move on a higher time frame, it's got to come back for that liquidity, because look, all of these bearish candles, bearish. All of this move down right here is a lot of liquidity. Okay, it's a lot of what? It's a lot of liquidity. So now price understands, okay, cool, there's a lot of liquidity here. Lying, there's 1, 2, 3, 4 days worth of bearish traders, 4 days worth of sales right here, 4 days worth of stop losses. So what happens? Price comes up, pinches it, melts. So now it's got enough money for the market to move. Okay, so what do? We scale in. Let's check the 15-hour. Okay, amazing. What's it looking like? Cool. We've got a level of imbalance. We've got a level of supply. Okay, the reason why I marked it from that wick is because on a lower time frame, this wick will be a candle. For example, if I go to the 4-hour, you can see. And if I go to the 2-hour, probably find something. Or the 1-hour. This was news, so it's very, very messy. 45. Let's do 30. 15. Yeah, it's a news event. It's very, very, very choppy, so you're not going to get anything clean, potentially. It's just a spike. 5. Yeah, see, on a 5-minute time frame, you've got a clean level of supply. Price tapped in, price melted straight from that level of supply here. So now let's go back on a high time frame, like the 4-hour. Go back on that. You can see that price has left furthermore, in terms of market structure, what can we see? Price is now forming lower highs, lower lows, lower highs, okay, lower lows. The next lower high. Now your aim is to identify where's the valid area for the next lower high. Could it be this level of supply right here? Okay, and I'm going to scale in and show you guys why I refined it here. Or could it be this level of imbalance that lies just above the level of supply here? Why? Because what do we understand from the analysis we just done before in terms of wicks and liquidity? This could also be an area of liquidity to get pinched and melt from there. But let's delete that to not overcrowd the charts, and we'll make it, we'll simplify it into simpler terms. Let's go on the 1-hour. We'll check the 1-hour. What can we see? Very, 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 very clean order block. And whenever I see an order block, I like to look to my left and see if there's any Asian highs that are lurking that haven't been taken. So over here, in this case, there was an Asian high, but it's been taken, so it's a positive sign for us. Okay, also, why is it a positive sign? Because there's a level of supply right here. Okay, and you might say, okay, but the wick is over. On a lower time frame, you'll find a clean supply here. Okay, for example, if I go to the 15, for example, let's see here, boom. What can you see? Clear as day. Level of this entire area is a level of supply. If I go to the 10, okay, you'll find, for example, here, boom. Perfect. This one is very small, you can see. Okay, small bullish candle followed by a bearish engulfing candle. That counts as a bearish level of supply. When price came up, took the Asian high, tapped into that level of supply, melted. If you watch the previous week's Zoom call or the week before that, I explained zones like supply zones, order blocks, and when they become invalid and how it can come either on the tap. As you can see, the tap, there's the types of mitigations. There's a mitigation of the tap, mitigation of the 50%, mitigation of around the 78%, and the top of the order block. So just always have your stop loss above. Stop trying to be greedy and have like a stop loss that looks like this. For example, you might enter the market from here and say to yourself, yeah, I'm trying to catch this entire move. So I'll put this is what people do. There's some people posted in February scholars group chat as well. They think we're not clocking it. Bro, we're traders. We understand what you're doing. We know we can see this. I know your psychology behind why you've posted that. So they'll see a big bearish candle, price moving in their direction, and they'll move their stop loss right above the high. They move the stop loss right above the high. The overall TP might be somewhere like at this Asian low here. Deep this, yeah? This is the crazy psychology of a trader. The overall TP might be at this Asian low right here. But what happens is, price gave them order profit, came back up, stopped them out, okay? Stopped them out. Right here, picture stopped by the time you consider spread commission, stopped them out, melted and hit the overall take profit. Why? Because they didn't respect the order block fully. You didn't respect the order block fully. Your stop loss, there's a reason why we say put your stop loss above the order block or supply zone. Put it above because that's the safe zone for a valid order block. If the order block is valid, that is the safe zone. Stop trying to have a 1-to-100 risk to reward ratio. It's not realistic. It's possible. We've done it before many times. 1-to-80, 1-to-70, 1-to-40, 1-to-45, 1-to-30. It's very possible. But try and be as realistic with yourself as possible. But don't enter the other extreme now where you're trying to catch 1-to-5s. Bro, chill out. What are you doing? You know what I mean? Aim for 1-to-10s. Minimum, let that be your minimum. Okay, 1-to-8, sometimes you're going to get a 1-to-8. Sometimes you have a 1-to-10, a 1-to-6, but aim for 1-to-10s. Look for 1-to-10s. If it's not available in the market, no problem. Don't force what's not available. Always have your stop loss in the correct position. But look, this just goes to show the psychology of a trader. The guy entered here. He saw these two impulse candles. He thought, yeah, that's it. I'm in for the win. I'm moving my stop loss right above the place I entered. His overall take profit was the Asian low. But before he even got to the Asian low, tapped him out, went in his direction. Why? He was being greedy. He just wanted to go all in and he didn't respect market structure. That's why he got finished. That's why he got bashed. Okay, so that is the explanation of order blocks and why you should always have your stop loss above the order block. Because look, you don't want to get into the other extreme now where you're saying, yeah, I'm going to wait till it touches 50% of the order block. What if it just taps and you miss the whole trade? Or what if it taps 78% of the order block and you miss the whole trade? Or what if it goes all the way to the top of the order block and you didn't enter because you thought, yeah, it's about to hit stop loss. That's why you just enter on the touch, keep your stop loss above. Okay, it's very simple, guys. Don't try and be too greedy. Just be grateful for your profits and trade like a professional, okay? So back to US 30. Let's go on a 4-hour time frame. Let's go on a 4-hour time frame. What can we see? We can see the price has taken those daily levels of liquidity. It pinched it as we spoke about earlier. However, we still understand that this can be new liquidity as well. Why? Why? Because we are overall in a supply zone, and this supply zone is now 50% of the supply zone has to get filled. Okay, so now if we were to overall, this was a supply zone on the 4-hour time frame, yeah? If we mark out the entire supply zone, it would look like this. Okay, 50% of the supply zone would be where? Around here, this area here. So price has filled 50% of it, or maybe slightly higher. Around here, maybe 50%. You can see what? The wick fulfilled 50% of it. So we can say, okay, cool. Now we're in for a bearish move because it's filled 50%. Hopefully we're thinking this is the final move up. This was the last point. This was the highest point that price will reach in order for us to now have enough liquidity to move down. This is the confluence. You have to always have a confluence behind your confluences. So now if we're looking for sales, we want to look for a reason to stay in sales. So the reason is what? The reason is the fact that this 4-hour level of supply was filled by 50% and all the previous days liquidity was taken. Look at this, guys. Look at this. If we use this tool here, for example, the rotated rectangle. Okay. This entire channel. By the way, buying at trend lines, as you know, people buy in channels as well. They buy, they sell. They buy, they sell. They buy, they sell. They buy, they sell. Buy, sell, buy, sell. So all these days liquidity got taken, got pinched. Price has enough liquidity to move down. Okay, so now we can delete this level here. And now we're looking for a reason to sell the market back down to this level of demand potentially. Yarimi University does not give financial advice. We simply share trading ideas of what we could potentially do in the market. We're not liable for anyone's decision making. Okay, so over here, we can see that price changed character once here. Okay, and price changed character. Okay, and price changed character once again. Where? Right here. Right here. Some may say, okay, cool. Now that this could have been an official change of character, and this could have been the break of structure, because now we are officially in a bearish trend, for example. So here, this could have been a break of structure to the bearish break of structure to the downside, and this could have been the next bearish break of structure. Okay. Okay. So we got a clean level of supply right here. We're not gonna consider this, like, we're not gonna overthink this. We're gonna take the trade if it offers us a small amount of stop loss on after it's changing character on a 5-minute time frame. Okay, so we're gonna wait for price to tap into the zone. Well, I'm gonna wait for price to tap into the zone. I'm gonna wait for it to maybe further distribute, change character again, leave behind a nice level of supply, and then I'm going to sell the market back down to these levels here. Okay, sell the market back down to these levels here. As US 30 is showing me very, very strong bearish indications for now. So that was my analysis for US 30, gold and Euro USD. We're doing 3 pairs today. We usually do 2 because I don't really trade a lot of pairs, but I trade the pairs that I can see nice setups on. So if Euro USD is acting up, I'm leaving her. Okay, I'm gonna come back when she starts behaving. If gold is giving me nice opportunities, I'm gonna take a look at gold. If US 30 is giving me something nice to look at, I'm gonna look at it. So that is how I like to approach the markets, and that's how you should approach the markets. You can't force your relationship with the pair because that's just the pair you trade. No, some days the pair doesn't want to give you an opportunity, you know, and you can't try and find an opportunity if there's no opportunity there. So now let's open the chat for some Q&As. If anyone's got any questions, anyone needs any help with anything, feel free to ask, guys. There's no such thing as a stupid question. I'm here to help you guys. We're always here to help. And yeah, let me just unshare my screen. Also, guys, I realized, actually, no, gone. Let me just stop sharing this so I can see you guys' faces. Yeah, cool. Let's go. If anyone's got a question, raise your hand and Saleh will unmute you. Anyone know what Asian highs and Asian lows are? I don't think you finished the course, brother. Finish the course and you'll definitely know what that is. Yeah, guys, there's a raise hand emoji. There's a raise hand icon. If you click on your top 3 dots, it will say raise hand, I believe. And then, yeah, exactly like that. That top left, brother. iPhone 5. Saleh, you can unmute him. Okay, so
Yeah, he's
Hello?
on mute. Speak. Yeah.
what's that?
Yeah, I see how you're using the change of
Huh?
and you were marking out your like you were refining your OBs that you would enter the trade off of. But you see on those timeframes which you're refining the OBs to, they already had the change of character. You feel me? Like so wouldn't that count as a change of character? Other than like you waiting for the one on the higher time frame, such as like the 1 hour, like you were doing?
Say that again, bro. Say that again, please. Slowly.
You see how you were going on
Sorry,
like
but
the
by the way,
1 hour?
when the question is very detailed, I've got to take it in properly. I'd like to imagine it. So if you don't mind,
Yeah, I noticed basically I just noticed that you were waiting for the change of character on like the 1 hour, but then you were going on the lower time frames, which is the 15-minute, to refine the OBs that you would enter off of. But when you go to those lower time frames, there are already changes of character because the highs are, you know what I mean, more frequent. Like, so why would you do that instead of just like considering the highs on the time frames that you were refining the pair to?
So are you saying why don't I just stick to the higher time frame, change the character as opposed to the smaller ones?
No. You are. I'm saying you are sticking to the higher time frame changes of character. For example, you said for that, I think it was Euro USD. You said you're not gonna consider taking the trade off of that OB until that 1 hour high gets taken out. But then if you zoomed into the 15-minute though, like there were already changes of character. If you understand, so why not consider those ones instead?
Yeah. So like I said, so for example, with me, I always teach, take each time frame as it is. And this is something I've learned with experience before. I would be very, very optimistic because I'll see a change of character on a 15-minute time frame, for example, but the 1 hour hasn't changed character.
Yeah.
So instead of putting yourself in a position where you're anticipating what's going to happen, put yourself in a position where what has happened is very clear to you. On a 15-minute time frame, that's why I'm bullish on a 15-minute. I'm saying, okay, cool. 15-minute has given me what I'm looking for. The 1 hour hasn't. So on the 15-minute, that POI right there, I'm very interested in that POI. It's very, very amazing to me. It's clean, it's nice, it follows everything that I look for. That looks good to me. But on the 1 hour, it's got a lot of potential, but I need that high to be taken in order for it to be valid on that time frame.
Yeah, I understand. But would you say somebody would be wrong for taking the trade before that 1 hour change of character, or no?
They wouldn't be wrong. They can potentially get it right. But me personally, I like to have A, B, C, D, E, F, G clear in my confluences for why I'm taking the trade. And if I get stopped out of that trade for the reason that I was thinking of, it's gonna pain me, because I told myself, look, these are the rules that you follow. You followed 4 out of 5 of those rules. And one of the main rules that you follow is what? Wait for a change of character on whatever time frame that you're trading. But because I didn't get it on the 1 hour, I got stopped out. And now I'm telling myself, oh man, I should have waited for the 1 hour clean change of character. So it's not worth it. In the long run, it's not worth the headache, basically. Because if you got a clear manual, you've got a clear guide as to how to enter a trade, and now you're kind of getting rid of one of your commandments, for example, you're shooting yourself in the foot, basically, bro.
All right, thank you.
No problem, bro. Hope that helps. Yes, guys, any other questions?
Assalamu alaikum.
Wa alaikum salam.
Yeah, and basically I passed my funded on Friday. I think I told you.
Yes.
And yeah, and do you have any tips for like the first couple of weeks? I just don't want to blow my account and lose it.
Yeah. Okay. Cool. So these are the tips that I'll give, and I think I've made a whole video on that, innit? I've definitely done it, but I can't remember where.
Yeah, I think you have, but I'm not sure where. So maybe we can like
I think it was a Zoom call. It's one of the Zoom calls for sure.
Yeah, a few weeks ago, when the one of the brothers that was like kind of struggling through it, you kind of spoke about it with him.
Yeah. So the advice I would give, number one, risk management. Don't risk more than 1%. Number 2, build a buffer. Your first 10K is not your profit. Have that in your head. Although it is yours. But psychologically tell yourself, my first 10K isn't mine. My first 10K is just a cushion. So you want to build a cushion for yourself. You want to build a buffer so that anything after the 10K profit you've made is now your profit. So now, for example, if you hit stop loss, you're not eating into the prop firm's money. You're eating into your own profits.
Yeah.
So psychologically, it helps you. You want to basically add as much psychological benefits to your arsenal as possible and not have to worry about, damn, I'm 2% drawdown, I'm 1% drawdown, I'm 4% drawdown. I've got to get out of draw. Do you get what I'm trying to say? So always build a buffer first. That's the most important thing. You build a buffer, you build a large cushion in order for you to now trade with peace of mind, basically, and say to yourself, okay, cool, if this hits stop loss, I'm not worried. Why? Because I've got 9K left from my own profits before I even get to the profits that the prop firm gave me, the capital that I've got from the prop firm. So that's the second tip I'll give. The third tip I'll give, don't overthink it. Don't overthink it. Treat it like a business. if I'm saying to you, I'm going to sell you Coca-Cola cans wholesale price, but I'm gonna sell it to you for like, I don't know, let's say £25 a pack. But then next door selling the same thing that I'm offering you for £15 a pack. Who are you gonna go to?
Yeah, the other person.
Other person.
The person's, yeah.
The reason why I'm giving an example is you might think to yourself, oh damn, I'm a funded trader. Yeah, that means I have to trade Monday, Tuesday, Wednesday, Thursday, Friday. You might open a account on Monday, you think you see a setup, you can see a nice a level of demand that looks nice, or an order block that looks nice, but reality, you know in the back of your head, there was a lot of liquidity that needs to be taken before this move is valid. But because you're a funded trader now, you want to feel as if you have to trade Monday, Tuesday, Wednesday, Thursday, Friday, because you want to feel like you have a job. When in reality, if you just wait for Tuesday, Wednesday, there might be news that's going to take out that liquidity, and then you get the clean move for Wednesday, Thursday, Friday. That's when you could potentially find an opportunity that's going to make you your 3-month salary, for example.
Yeah.
But the problem is when people think about trading, they forget about their lifestyle. Cool, the lifestyle comes after. The lifestyle doesn't start the moment you're funded. The lifestyle starts the moment you withdraw. And, you know, people think, okay, yeah, I'm funded now. Let me just hit one lick and khalas, that's it. No, if you think about the one, like you're going to lose your account if you think about hitting a lick.
Yeah, apparently a lot of people don't get like a withdrawal. That's what
Yes.
a lot of people don't actually get withdrawal.
Exactly. A lot of people don't get to the withdrawal stage. Why? Because they get the funded account, they have a big ego, and they say, yeah, I can do this, man. I'm a boss. Da, 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 da. So all of the sacrifice to pass phase 1, to pass phase 2, they literally don't come into the live account with the same mindset. They think they can't lose a live account because they think, yeah, I'm infallible. I've passed phase 1, passed phase 2. You can't chat to me. I've come out of deep waters before. I've come out of a drawdown. This is a walk in the park for me. This is nothing new. This is nature. I've been in these areas before. I've been tested. I know how to come out of drawdown. I know how to make profit. So let's go. Live account, no problem. I'm gonna make 30K tomorrow. But guess what happens? They hit stop loss twice. Then their journal goes out the window. They say to themselves, I've got this rule for myself. My personal rule, for example, I don't lose more than 2% a day. You tell yourself. Then all of a sudden now you're losing 4% in a day.
Yeah.
And you lost 4%. So what happens? The next day you come back into the markets, you try to find a setup that's not there. You try and justify it by marking out equal highs, equal lows, liquidity here, this, that, when that's not the case. Subconsciously, the reason is because you're just angry, you're in drawdown.
Yeah, revenge trade. Yeah.
Does that help, bro?
Yeah, thank you, bro.
Yeah, no problem. So yeah, just bro, treat it like a business. Buy cheap, buy at cheap, enter at cheap prices. That's it. Always enter whenever the price hits that nice level of supply, that nice level of demand, that nice clean order block. Treat it like a business and you will see results. It's very simple.
Another thing.
Like, for example, me, that this week I took a loss on gold.
Yeah.
I'm walking to the gym, I was up 30K. I was up 30K.
Yeah, I heard.
I didn't take my profit. Why? Because I know I'm a trader. I know I've got a skill. I can catch fish. I came back home, price hit my stop loss. I put in a Discord, gold -1R. I lost that trade after being 30K in profit in literally 2-3 hours. Why am I not stressed over it? Bro, that day I ordered food, I was chilling, my friends were here playing FIFA. I'm not stressed. Why? Simply because I know that I can catch another trade. That guys, it's a $7 trillion daily market. Why are you stressed over one day's loss? Look at it for weekly growth, monthly growth. If you're up for the month, you're good. Why are you stressing for? You got people like, JP Morgan, these hedge funds, these financial firms that offer you 6% returns on a yearly basis. And you're out here making 6% on a trade. Realize how blessed you are and how rare this is in the finance industry.
Yeah.
I come from. Hope that answers your question, bro.
Yeah, one last question. Like, when you took your first trading exam, how long did you wait before you took your other ones? Or did you just hold one account for a while?
No, I didn't. I only traded one for a while. I'm not gonna lie. Yeah, I only traded one for a while because I didn't understand the importance of having multiple accounts. And after that, you're gonna fail accounts as well. I failed accounts as well after that. But to be honest, what messed me up was funding talent. Like, alhamdulillah, I went in, I made 65K in a day, requested my payout, and then that company went bust, which is why I'm very, very strict on recommending you guys. That was early days of prop firms, etc. Yeah, That's why I'm very strict when I recommend you guys prop firm. You guys don't move cheap. Stop moving cheap when it comes to trading. People say, yeah, this new prop firm's out. Oh yeah, but this costs $100. Oh yeah, but this costs this much. Stop looking at the price. You're gonna pay for it. I'm telling you, they'll make you pay. Go for the ones that are most reliable. FTMO, they're regulated. Okay, if you're that kind of guy that's, you know, regulation savvy and you want the best, cool. Go to FTMO. My Forex fund is very reliable. Okay.
What the funded trader? The funded trader.
I can't speak on something I don't know.
Yeah, that's what I'm with right now. But you're scaring me.
No, but I've heard good things about the funded trader. But I can only speak on what I know.
Yeah.
You get what I'm trying to say? So when it comes to prop firms, stop looking at what's new and who's cheaper. And I'm telling you, you have to go with the ones that have the most financial backing, the most reliable. Just stick with that. There's a reason why they've been around for years. Okay? So that's what I'll say, bro. Hope I would answer the question. We can take the next question now.
No problem. Thank you.
No problem, bro.
Hello.
Hello.
Assalamu alaikum, Yarimi. Hope you're well.
No, bro. How you doing? Okay.
Yeah, I can't complain, bro. Alhamdulillah, recently I've completed the course and I'm going through the group sessions. This is gonna sound like a proper silly question, but you know when you mark out,
bro, man. We'll start somewhere. Like.
Yeah, you know when you mark out supply and demand.
Yeah.
I'm marking out my supply and demand based off imbalance and then going to the candle before. But I've noticed that sometimes when you mark out supply and demand, I'm not seeing imbalance. So I'm trying to understand what you're seeing when you mark out supply and demand.
So in order for supply and demand, order blocks, they're all the same.
Yeah.
Okay. In order for you to have a valid supply, demand, or an order block, it needs to have taken liquidity and changed character.
Okay.
Okay.
So that's what things you look for.
Okay. No, let me. It's the step by step is in the course. Literally, just wait for you mark out your higher time frame POI. Okay. And then within that POI, you wait for Wyckoff.
Yeah.
People say, yeah, I don't. Some people say, oh yeah, but why do you have to trade? Bro, like if you don't consider Wyckoff, you are going to get Wyckoffed. You have to understand, like a UTAD happens when a lot of people's stop losses get hit. That's what a UTAD is. So cool, we might not necessarily, the Wyckoff is not the strategy. Wyckoff is something that we consider within the strategy, like the course teaches, exactly how the course teaches. So within that zone, you wait for Wyckoff, then you wait for a change of character to breach the lower low or the higher high in whatever direction that you're in, for example, whatever the trend may be. And then after it's done that, it will leave behind a supply level if the market is bearish, or it will leave behind a demand if the price is bullish. And then you consider those areas to trade from. If those areas offer you a stop loss below 10 pips, this is our preference in the course, you can take the trade directly from it. If the stop loss is above 10 pips now, you wait for price to tap into it, you scale into the lower time frame, like the 5 minute or the 4 minute, 3 minute, 2 minute, whatever it is, and you wait for this Wyckoff distribution again, then another change of character, and then a last point of supply, and you can enter from that.
Okay. Yeah, so basically the POI is where you then sort of dissect the whole market.
Yes. It's literally your point of interest. That's when you start looking at the market.
And it sounds dumb, but your point of interest is based off what?
Your point of interest is based on same thing, higher time frame, change of character.
Okay.
So the higher time frame would have distributed. The distribution now won't look as clear on the higher time frame. But if you scale in, you can see the clear distribution will play out. But the higher time frame, for example, if I'm on a monthly or the weekly or the daily, all I'm looking for is a liquidity sweep from the bottom. If I'm looking for sales, change of character, and it will leave behind what? An order block, a supply level somewhere here.
And then from there you dissect it to find why.
And now up here, so after price change character here, and it's left behind a supply level here, that area is my POI. And over here, I'm waiting for price to tap in here. So now I can dissect the market on a lower time frame basis.
Thank you.
Yeah?
Yeah.
Does that help though? Yeah, does that make sense, bro?
It helped a lot. I'm just gonna test it.
No worries, bro. Perfect. Yes, guys, any other questions?
Assalamu alaikum. Assalamu alaikum. What's good, Yarimi?
Alaikum salam, my brother. What's going on, man?
How you feeling, man? How you feeling, man?
I'm all right. I'm nice.
That's what's up. That's what's up. I got a few questions I wanna ask you. So the first one would be, I don't know if it's too much for you to just pull up your screen again. It's about your
Yeah, again, sorry, your mic is a bit muffled, bro.
Can you hear me now? Is it good?
Yeah,
Actually, hold on, give me 1 second.
it's a bit unclear. I'm not gonna lie, but it's a bit muffled.
Here, let me check out my headphones. It'll probably be better real quick. Give me a second.
All right, perfect. Go on, bro.
Is it better now?
Yes, perfect.
All right, cool. Is it can you go on to your Euro USD chart real quick?
Oh.看可以让你慢慢收一点。然后，看可以用，然后能不能写？
Okay, yeah.
The Euro USD. And go down to where you have that that long position, like that potential long position. So I remember earlier you said that you would want to see a break above that that higher low before validating your order blocks, right? So my
No,
question
the 1
is,
hour. The 1 hour.
yeah, the 1 hour order block. Once it validates it, are you gonna look for shorts until you get to that demand level?
Unless I see like a clear change of character from like a
From up there?
Yeah, like if I'm not this area here,
Okay.
and I stay in, I might be able to find something here within a 10-minute. See, straight away, as soon as I marked it out, boom.
Okay, cool. And like you would look for shorts there to ultimately come down into your demand zone so you can ultimately take it back up.
Exactly. However,
Okay, cool.
I'm not gonna be too like keen on this one because I understand that the Asian high is not too far away from Asian high is only.
It's just kind of like what happens first, basically, right? You're kind of just gauge it as you go.
That's why I just set alerts and I see what happens first. And whatever happens first, I'm ready to pull the trigger because I've got my confidence over here. Trendline liquidity, clean level of unmitigated supply. I'm ready to sell. If price comes back down here, clean level trading character, 15-minute time frame taps in, stops me out, no problem. 1 hour level of demand lies right here. I've got options. That's why you have to become an adaptive trader.
Okay, cool. My second question is going off of like kind of what did he said? He was like before you like funded your own live account, did you get max allocation with like FTMO and MFF before that, or did you just kind of like just run with a 200 or 300 and then fund your live account?
No, I was running with 100K first. Then I was running with a 200K.
Oh wow.
Yeah.
What stopped you from just saying, let me just go full max allocation on everything?
To be honest with you, it was a psychology. I didn't feel like my psychology was ready for those big numbers just yet.
Okay.
I was still getting comfortable with like stomaching, 2K losses on a 200K account. I was still getting comfortable seeing that drawdown in those waters. And then like I didn't want to, them was there, like I've fallen in love with the journey. I didn't want to jump from a 100K account to a $500,000 account. Do you get what I'm saying?
Yeah.
I don't believe in rushing the process. And yeah, like my aim for this year
is my background too loud, by the way? I'm at work right now. All right, cool.
Yeah. My aim for this year, inshallah, is to trade 7 figures in personal capital. That's my aim for this year.
Inshallah. All right. Next question would be before going for funding, did you decide to like, okay, I'm gonna back test 500 trades before I know I'm ready? You just kind of just off feel?
Nah, me, I'm by nature, I'm just impulsive, bro. I'll be honest with you. Like I just take a challenge. And yeah.
What about if you how many did you blow them?
Though, like I won't take a challenge when I know I'm not ready. Like I'm not delusional. Like I know if I know I have the ability, I'll do it. Like I won't start a course, finish a course for 1 week, for example, and say, yeah, I'm ready to go. Forget it. Let's take a risk. No, let's be realistic, mate. You know what I mean? Like take some trades, back test, and then when you feel like, okay, cool, I'm getting this, I'm doing this. There's a difference between getting it and doing it. Once you're doing it and you're really in the field and you're forward testing and you're placing trades and you're seeing results, the sky's the limit, bro.
That's bro. I appreciate it for
the right time. There's no such thing as a right time, bro. Yeah?
Gotcha. All right, bro. That's it.
Go on, bro. Yes, guy. Next question.
Assalamualaikum.
Alexander, what's going on, bro?
Yeah, good. How are you, bro?
I'm all right, man.
Yeah, I've got two questions.
Yeah.
The first one is about psychology. Obviously, I put a big emphasis on that because obviously it's a big thing in it.
Say that again.
So-
Say that again. I didn't hear what you said.
I said psychology. I'm working on my psychology. I've been reading some books, the ones that were recommended to me, like the Mark Douglas one and Trading in the Zone and whatnot. He speaks about in the book. He says something in regards to rules and having rules to stop you from getting. One second. Sorry about that. Yeah, he was talking about some rules to stop you from getting reckless and whatnot. I wanted to ask you, what are your rules? And if you could share with us some of yours to help us better make our own ones.
So my rules is I have 3 entries for a POI.
Okay.
Like, for example, if I have 3 zones that I'm entering from, I have
Okay.
3 entries, for example. Sorry, 3 entries for the day. If I enter one pair and it stops me out, I have basically 3 shots for the day. I can either enter again from that pair if it taps a higher level that I'm interested in, or if it disrespects my first zone and my stop loss gets hit, I'll take the second zone. However, if that stop loss gets hit now, I've got 1 shot left for the day, basically. And because look, you can if you're risking 1%, for me personally, I like to risk maximum 3%. When I'm obviously, sometimes I might do a flip, like just use some of my own capital, put it in money that I don't care about losing, basically, yeah. Just to challenge myself, for example. It's not the way you should trade. I don't trade like that anyway. But sometimes, like for example, when we went to Dubai, I literally said to my friends, yo, I'm about to put in 1K in this account. If I take this account to 35K, we're gonna go to Dubai. I literally put in 1K in that week, and we went to Dubai that week. So sometimes I might be cheeky, I might do something like that when I'm feeling like it. So for example, but generally when I'm trading on my personal account or whatever it is, I'll tell myself, cool, I've got 3 shots. I've got 3 shots. If you're risking 1%, I don't like to really lose more than 2%, 3% per day. Okay, but if you're risking 0.5% now, you've got more, you're buying yourself more room. That makes sense. So yeah, personally, me, I like to trade New York session. However, sometimes for certain pairs, if there's a news event coming up, or if I see like a clean area in London session and I'm awake, I'm usually awake in London session anyway. So these days I've been trading London session. But for US 30, strictly New York. I don't trade US 30 London session. So yeah, that's what I'll do. In terms of psychology, set and forget. So I'll enter my trade in a position where I know my stop loss won't get hit very quickly. If my stop loss gets hit, it will take some time. So it gives me the psychological room for me to enter a trade, walk away, get about my day, go to the gym, do my thing, and I come back and I can still be in the trade. Or if the traders hit my stop loss, like it's not a thing where I've entered the trade and traders hit my stop loss in 5 seconds. If the trader stop loss, no problem, but enter from a place where, you know, it will take some time for your stop loss to get hit. Like enter from a realistic zone. Yeah.
Okay. And the second one,
and don't trade news. Don't trade news. If you're in the trade from before, like time back, don't try to be cheeky with it as well. Don't enter at 12:30 and you know news is coming out at 1:30. When I say if you're in the trade from before, like if you're in the trade from the day before, or you're in the trade from the morning, like morning London session, then you can hold the trade throughout the news, because by that time you should have been in profit like a long time for a long amount. So like, price should be long gone, basically.
Yeah. Yeah, the second question is there any spare tickets for the workshop on Sunday? No?
Shall I tell you the honest truth, yeah?
Yeah.
Honest truth is, there's only 250 seats. All of them have been sold out in 50 seconds. And I've still got some Yarimi University staff members to bring.
Oh, okay.
Our little brothers are trying to come, and they've got no space.
Okay.
But I'm going to have to speak to the venue and see if I can even get like 10 more seats. Like, bro, it's very, very, very tight. The only way is if someone can't come anymore. Can you know what I'm saying, bro?
Yeah, no problem.
Yeah.
Appreciate it. Thank you for your time, bro.
No worries, man, bro.
Good night, bro.
No worries, bro. Take care.
Yeah.
Question, guys. And by the way, there will be security at the door, so anyone that's kind of trying to show up with no ticket and, you know, trying to do it inshallah thing, I appreciate the faith, but you got to stick by the rules, man. And it's not me, so you can't even look at me and give me puppy eyes. It's security that are getting paid by the hour to do their job, and they are not having it from no one. Last time people tried to go down, so please don't try and be the anonymous guy. Anomaly, sorry. Yeah. Any other questions, guys?
Yeah, I have a question, Yarimi.
Yeah.
So for me, it's with the prop firms. You know how we trade based off the demo accounts on the MetaTrader?
Yeah.
We usually, like us students, you see us in the Discord, we like share our trades, and alhamdulillah, like most of us are successful. We start to gain knowledge. What if I feel comfortable from my trading experience with the MetaTrader 4? Do I still would you still recommend that I have to do a couple tests for the prop firm exam?
If you feel like you're ready, I'm not one to tell you that you're not ready, bro. If you feel like you're ready, do it.
But you had this rule where you said pass it 3 times before you take a real one.
As in, yeah, so if I recommend something, it's obviously for the best, and there's a reason why I've said that. But if you feel like you don't need to consider that, and you want to do your own thing, go ahead, do it, try it out, and if it works for you, let me know.
Okay, and then my second question is, I don't understand when you say don't trade based off news, because news affect the market. And when you see that the market gets affected, like say, for example, like something like the coronavirus, where you said that in 2020, like it did a big dip on the market because of the news that caused the market to go on a downfall, bearish market. What if I want to get the prices at a cheap price because of news affecting it?
Good question.
Now I would stay out of that trade because, hey, Yarimi told me don't trade based off news.
Okay, amazing. So to answer your question, I'm gonna answer your question like this. What area? Okay, you're from Canada, right?
Yeah.
Okay, cool. So if I tell you now, in London, we have a lot of traffic, right? Our traffic is around 5 o'clock. We call it rush hour. So if I tell you now, Yusuf, come and see me at 5 o'clock. That means you have to leave your house around 4 o'clock, 4:30. Okay. By the time you leave your house at 4:30, by the time you get to me, it might be like 6 o'clock, 6:30 or 6:15. But if I say to you, Yusuf, come and see me at 8 p.m. and you leave your house at 7:30, you're gonna get to me at 8 p.m. Would you, if I say to you, if you leave at 7:30, you're gonna see me at 8 p.m.
Yeah.
Which one would you choose? Leave at 7:30, and by the time you drive and you get to me at 8 p.m., or leave at 4:45 and you get to me at 7 o'clock? Which one would you choose?
4:45.
Why don't you go at 4? Why don't you go? You would go at 4:45.
Wait, what was the question again? Would I rather leave and get there earlier, or would I rather leave?
If I say to you, Yusuf, come and meet me today. You can come at any time, but I'm giving you 2 time slots. The first time slot is you can either leave your house at 4:45, but the distance is going to take you to drive. By the time you get to me, you're going to get to me around 7:30. Or if you leave at 7:30, you will get to me at 8 o'clock. Which time would you choose to drive?
The faster time, like the quick time, 7:30.
But why don't you join the traffic?
Because you said it's only gonna take me half an hour to get to you. Why would I want to leave somewhere early? And you've told me to meet you at a specific time.
Yeah, but you're getting to the same destination, no? So why don't you just leave earlier? Because you're joining, like everyone's going the same direction. You don't want to miss destination, man. Join the same route with everyone.
Yeah, that's true. I get what you're saying.
That's the example of news. News is when the markets are congested with every type of trader in the world. Every type of trader to get rich quick.
So it's like everybody trying to jump in the trade same time because
at the same time. And what do we understand about liquidity?
There's a lot of it in the market.
A lot of it in the market. So if everyone's trying to jump in the market at the same time, because you have to understand news events, especially like FOMC or NFP, I'm one of them. People are putting in £200 on their own live account and flipping that £200 into 2K in 5 minutes, just based off a news event.
By the time I get in the market, it'll already be too late.
Exactly. And news spikes both ways first. So price is going to do its thing. It's going to end up in one direction, guys. Financial corporations, they have quarterly meetings on where they want price to go. Right now, they've already had the meetings for the first quarter of the year of where they want gold to be in the next 3 months. The price of gold is going there. It's 100% going there. You just have to catch the entry. So irrespective of news or not, the price is going to reach its destination. You should avoid traffic times, high traffic times, AKA news, avoid it. Because after news is done and the road is clear, then you can leave your house and you can come see me and drive quickly.
Here's the thing though, what if I monitor the news 24/7 and I'm one of those early people to get in the market? Would it still be sticky to still do that?
No, there's nothing wrong with holding your trade throughout news. There's everything wrong with entering when the news comes out. Because when the news comes out, it's not going to go in one direction straight away. It's going to spike in both directions.
Because of different trades.
Then it makes its move.
I get it. Well, I get it now.
Next time there's a major news event, bro, go on the 1 minute time frame, sit back and just watch it.
Oh, okay.
Trust me, just like especially NFP. NFP is coming up like next week, yeah?
Yeah.
It's going to be the first Friday of the month. Watch NFP. Just all of you guys, that's the homework. When NFP news comes out, just sit back, go on the 1 minute time frame and just watch.
Yeah, well, I made so much more sense. I appreciate it, man.
I hope that helps, man.
Yeah, I helped. That helped.
No problem. Yes, guys, any more questions?
Yes, Hamza, you can ask a question, bro.
Oh, sorry, bro. So, yeah, so basically, I just want to describe the stage I'm at, and I want advice from the stage I'm at now to being a funded trader. So at the moment, alhamdulillah, I've just finished the course, and I finished it a couple times now, but what I want to still constantly watch it just for every little detail. So what I'm doing is separating the days into 2 sections. Can you not hear me, by the way?
Yeah.
Cool. Alhamdulillah. So cool. I'm separating my day into 2 sections because of like training, all those kind of things. So what I do in the first half of the day is I go into Yarimi University and watch at least 2 videos. Bearing in mind, I've already rewatched the course like 2 times or something. So I watch at least 2 videos, obviously make notes again, like just watch it over again. And then on the second half of the day, I would either watch all the pre-recorded lectures or the market analysis, and then I'll try go on my laptop and obviously try find my own trades. I do find a few, but it's very inconsistent. Like obviously I've taken pictures of it and whatnot just to mark it out on what day and what time that I've found these kind of entries and whatnot. But it's actually very, very inconsistent. So I'm at that stage now, and it's obviously when you're inconsistent with these kind of things, it gets kind of annoying, innit? But I know I have to keep going and whatnot. But am I doing the right things to get towards being that funded trader? I have another question after this, but yeah, this is the first question.
Yeah, so far you're definitely on the right track, bro. You're following what we recommend, which is going through the course, going through it multiple times until you understand concepts, then utilizing the Discord, especially the questions tab to ask questions. We've got a support team, amazing support team.
Yeah, alhamdulillah.
That help out. So utilize asking the Discord, asking the questions in the Discord. Go through all of the recorded sessions in the group Zoom sessions. You go through all of that. Jump in trading talk. There's some very, very good people that you can, let me rephrase that. There are a few good people on trading talk. So go on trading talk. Because look, some people come and trade and talk with no experience and they want to teach everyone. I say it doesn't work like that.
Yeah, I saw that. To be honest, I was on it, I think a couple of weeks ago. So I think someone was doing retail or something, just kept on getting stopped out.
Yeah, I say so sometimes. But it's good. It's good as in like if they're openly claiming they're doing retail, let us know and we have to send them a message.
Yeah, no, but it just looked like they were doing it because they just kept on getting stopped out when there was liquidity.
Trading talk is for revision purposes, so you can make mistakes. It's calm.
But cool.
You guys, whoever's on trading talk, don't take them as teachers. So trading talk is a platform where you guys can revise together. You can backtest. You can make mistakes on there. That's what it's for. Make mistakes, learn, correct each other. But there's no teacher on there. If you see someone trying to act like a teacher, please let me know, because you have to be qualified for that stuff.
Cool.
Yeah, being funded doesn't mean you're qualified to teach.
Mm.
You have to have badges and stripes in this game for a very long time.
Mm.
So yeah, bro, you're definitely on the right track, man. That's all you got to do. Just keep doing what you're doing. And as you see, every day we're just popping funded traders left, right, center.
Yeah, I know, bro. I do believe in the process, but it's just I'm at that stage where I think every trader's been here, innit, where it just gets frustrating to look at the markets over and over again.
You know what it
I'm
is,
sure
bro?
you probably experienced it.
Yes, and there's something called the trader's curve. The trader's curve. You start in the beginning, and you start learning. As you're learning, things don't make sense, and then what happens is things slowly start to make sense. Then you start placing trades, you start winning trades, you get that beginner's luck. Then you dip in motivation when you start hitting stop loss a few times. Then you start getting consistent again. Then you take a few more losses. Then you get to a stage where you go through a crazy losing streak that may be going on for a bit too long, longer than expected. Then you ask yourself, bro, do I even know how to trade? What's going on? Like, I used to catch pips, like what's happening? What the hell's going on? And usually this mindset stems from over leveraging, over risking. Which is why we only teach the risk 1%, because if you had £100 in your account and you only lost £1, are you going to be stressed? No, because you've got £99 in your bank account. So if you had 100k balance and you've lost 1k and you've got 99k left, you're not going to be stressed. So this dip in motivation usually stems from someone over risking their account and trying to make a meal overnight. It doesn't work. You can't. Okay. So then once you get a dip in motivation, you start becoming consistent again. You start profiting. You have one more dip in terms of your motivation, your trading, your losses. And this is where people quit. After this point here, that's when the exponential curve starts for a trader's journey. This is where you find profitability and you start finding your feet in the markets and you start to understand the markets fully. The problem is everyone quits here. At this point here, this is where everyone quits before the curve starts taking place. And exponentially they start growing into consistency.
Cool. Yeah, makes sense. Alhamdulillah. Yeah, so one more quick question. I don't know if you've mentioned this exactly on the fundamental news on your university page, but where exactly would you find the fundamental the fundamental news? Like, where would I be looking at?
You get to be honest with you, we're not fundamental traders, so news events are just an excuse for technical analysis to be followed.
Okay, cool.
So you'll find most of the time with the strategy that we trade, it's news events are just an excuse to move price. And usually price will move into our imbalances, supply and demands, order blocks, take out equal highs, equal lows, levels of liquidity. But if a person wants to do further research, for example, why did oil increase or drop? Why did gold increase or drop? You can take a look at news articles. You can research like Bloomberg. It's just extra if you really want to. You don't have to, but if you wanted to look into the nitty-gritty of things, you can even watch the news. Like watch the news on why gold, where gold is at the moment, why gold has dropped. If this country gets into war with this country, how would this affect this market? And things of that nature. For example, the whole Russia-Ukraine war, how did it affect the Russian currency? How did the euro get affected overall? Take a look at those sort of things if you want further confirmation. This is why we say trading fundamental news is very, very, very important. But you don't have to understand fundamental news. But if you wanted to remove technicals and just trade fundamentals, you can be a very profitable trader just for fundamental news, which goes to show that the analogy people have of trading, oh yeah, risky, oh yeah, trading, oh yeah, but you don't know what you're doing, bro. Like, it's the economy. At the end of the day, it's economics. That's supported by financial stuff in the form of candlesticks.
Okay, cool. Yarimi, basically, I've missed obviously this week's meet and greet, but sorry.
What do you mean? Oh, the event?
Oh, the thing, the workshop.
Yeah.
So I've missed. Obviously, I didn't get a chance to get on it because I was late. But do you roughly know when the next one's gonna be? It might be a bit of a question, or
every month, bro. Every month we'll give you like yeah.
Is it most likely on a Saturday, Sunday?
Yes, that's what we aim for, because people are usually sometimes off work, off uni, stuff like that.
Yeah, it's because basically, bro, the boxing fights, if you get called up, it's like Saturday, Sundays, isn't it? That's why. But alhamdulillah, inshallah, I'll make room for it, inshallah. But it's definitely important. Oh yeah,
boxing plug, yeah.
Bro, yeah, I've been boxing for like 6,
Young
7
little
years
famous
now,
boxing plug, yeah.
bro. Yeah, you know, this is why, bro. I was gonna say, yeah, just to end off, bro. I was gonna say, Jazakallah khair. You know, like honestly, I really appreciate what you're doing. Like, you actually didn't really need to do this. Like, alhamdulillah, like obviously you've got your own thing that are doing well. But yeah, obviously the community you created and everything is giving like a lot of people purpose, isn't it? So for example, bro, I've been boxing for like 7 years and like also, bro, since I was a little kid, innit? And it still hasn't paid me yet. Do you get what I mean? So like life gets a lot harder when you're working and you're training twice a day and whatnot. So it just feels like it's like at that breaking point. Do you get what I mean? So you need something. So alhamdulillah, obviously I found this, bro. And it's been like, it's given me a good, like, do you get what I mean, bro? So it's actually changed like so many lives, bro. You wouldn't understand. But like bro, I'm so grateful, bro. Alhamdulillah, like, thank you, bro. Just keep up with what you're doing, man. Honestly, you're doing good for us, wallah.
Appreciate it, man. Thank you, man. My guy. Big Hamza, you know.
No, it's okay. Sorry.
My guy, Alex, no. What a lad. My brother.
Hi, Yarimi.
Yes, bro.
I'm not sure if you remember me, but I just wanted to ask.
I remember you. Come on, how can I remember you, man? Come on, man. Yo, this is if you need the craziest trainers, this is my brother here. I met him outside a Yemeni restaurant. Yeah. There.
So I just wanted to say, I'm still 17 and I've gone through the course and done everything and started to back test and gone through the group sessions, but I'm not sure, like I'm 18 in like 6 months. So I don't know if I should keep waiting until I'm 18 to do like a funded challenge and stuff, or I should try to open a live account on someone that's 18 now and just try it.
If you feel like you're ready and you've got the results, do it. Because my little brother, he was young at the time, he's still young, he's 17, and he does it under, you know, someone above the age of 18's name.
Yeah.
And plus you can withdraw in crypto and stuff, so it doesn't really affect you. The game's the game, bro. Both my little brothers are traders and they're cold as well, so along with that, if you get.
Yeah. Thank you for that.
No problem, bro.
Assalamu alaikum, bro.
Excellent, bro.
Hey,
the great.
Alhamdulillah.
The ack.
It's me, man.
My guy, what are you saying?
Alhamdulillah, man. I've got 2 questions, yeah. A bit earlier in the call, you said about having, if you make 10 bags, or like, don't see that as your money, see that as like a buffer. Yeah. So you saying don't withdraw until like you've got like that 10 bag buffer that you can then start to make more money with it.
No, withdraw.
Okay.
Withdraw, definitely withdraw.
Okay.
Because you have to understand from that withdrawal of 10K, I'm just saying like if a person, your first 10K, like as in build a buffer, build a buffer.
Yeah.
But at the same time, you don't want to be delusional. Analyze your situation. And this is where I really want you guys to pay attention, yeah? Don't be delusional. Analyze your circumstances, your financial situation in your life, and ask yourself, do I have 10K? Do I have 1K in my bank? Do I have 5K in my bank? Do I have 6K, 7K in my bank? If not, withdraw that 10K and have it on the side there, because that 10K can now pay for how many challenges? And now you can eventually scale up and trade, you know, 2, 3, 200K accounts on my Forex funds. Like you can have 3 300K accounts. Now you're trading 600K in capital, where 1% risk is 6K on a trade. Imagine the risk reward, you catch a 1 to 10, that's 60K. We got to do is pass 300K test 3 times. Start looking at it in terms of percentages. Try and find a way to scale up and have the best possible percentage outcome. Does that make sense?
Yeah. My next question is, I've had a lot of things about sort of the account resetting every month, but I don't see that on with the funded trader or on their website. So like, do you know with any other prop firms, like at the end of every month, does the account like reset? Like let's say you're in prof, does it reset back to 100K? Or let's say I end them up with 102, like so £2,000 up, would it stay £2,000 up into the next month?
So some of them have a scaling up option. You can buy the usual evaluation account, or you can buy the one, they've got different ones. For example, you can buy the one that allows you to scale up. If you buy the one that allows you to scale up, the account won't reset.
Okay. I think that's the one I got. I think so.
Yeah, so then you should be good. But just do your further research. So just still look into it and try to find
Yeah.
out.
All right, cool. Appreciate it. Thank you.
Let's go next question.
Assalamu alaikum, bro.
Alex, bro. Hassan, what's going on, bro?
Good, man. How are you?
I'm all right, my brother.
Yeah, bro, I was just gonna ask the question for you. Like, you know, as you know, like everyone's jumping on SMC nowadays. I was gonna say, like, what do you think like sets you apart from like every average SMC trader?
ألم ترى أن الصيف ينقص قدره إذا قيل إن الصيف أمضى من العصا. Can't you see how the sword loses value the moment that it says it's sharper than a stick? I'm not saying I'm a sword.
Yeah.
I'm not saying I'm the best.
Mm.
What I won't do is compare myself and tell you, yeah, I'm better than this guy and I'm the best and Yarimi University is this. Bro, for us, you can trade SMC however you like. You can be an SMC trader. You can trade ABC, whatever you like. If you're making money, that's what's the most important thing here.
Yeah.
We're trading to make money. We're not trading for our charts to look pretty. We're here to change our lives, to change our family's life, to make money, to live a good life, to be relieved of any financial burdens that we may have, to live debt-free, to pay off our debts, pay off our university, wherever it is. You get what I'm trying to say?
Yeah.
So I'm not going to tell you I'm different because of this, that. Because the truth is, information to anything in life is online. I say if the internet or Google was the gospel to success, why aren't there successful people in the world?
Yeah.
So you don't value what you don't pay for.
Yeah, I hear you. Also, I had one more.
SMC, there's a lot of sick SMC traders. Can't say. But what makes me different, I don't know. You tell me, you look at my platform, you look at everyone else's platform, and you tell me who's paying 5K a month, who's got 5K a month expenses just on the students, paying for venues for free.
Yeah, I hear you. Yeah. Yeah, I had one more quick one if you don't mind.
Yeah.
Yeah, it was just about
actually it's around 8K actually a month that I pay.
Yeah, that's crazy, bro. Well, I respect you, man.
You get, and the winners of the funded challenge will be announced on the 26th. So I'm gonna be paying for free students, 6-figure accounts.
That's crazy, man. Respect to you, man. Yeah. It was about premium and discounted zones. Do you use a Fibonacci to mark out, or do you just like go off your eye?
Fibonacci only tells you, using Fibonacci basically tells you where the correct order block is or imbalance.
Yeah.
And you don't need that because once you mark out your chain of character and you mark out your supply or demand zones, the Fibonacci is going to come and tap into that anyway. That's why we don't really use it. Like I'll take it out sometimes, but it's only to show people that you don't need the Fibonacci. It's gonna come into the zones you marked out anyway.
Yeah.
And you don't use no indicators.
Yeah.
The Asian range to show you where the Asian high and low is. And even then you don't really need that indicator. You can look at the session manually, but it just helps you to have that on there because it just shows you clean where Asian high and Asian low is. But yeah, all that's why when people say, oh yeah, inducement, this one, that one, discounted premium, bro, it just means enter at a cheap price.
Yeah.
Where traders are getting enticed to enter the market too early, which is what we teach. Trendline liquidity, equal highs, equal lows, demands and supplies that may fail due to previous liquidity, like we mentioned today. Remember when I marked support resistance and showed you why we're not taking this demand level? Simply because of that. It all means the same thing. People just try and use words to make themselves sound smart.
Yeah.
I swear to God, like people this trading thing, because you have to understand, trading for a lot of these people is because like they got no other option in life. So they're trying to sound like a professor. They're trying to sound like a medicine on the charts when there's no need. There's no times on this chart. There's no fractional distillation, bro. There's just an order block. Enter from the damn order block and take your profit, bro. Stop trying to sound this time. You get what I'm saying?
Yeah, bro. Hey, bro. Thank you, bro. See you at the event, bro.
My boy. I'm gonna see.
That's up, bro.
Alright, guy.
I love, bro.
No, bro. Yeah.
Assalamu alaikum.
Salam, bro. How are you?
Brother, I'm good. I'm good. How are you?
I'm amazing. I'm amazing. You know,
Brother, I just want to ask.
Yes, Maslah. Oh boy.
I just started the course 2-3 weeks ago.
Yeah.
I went through the course 2 times. Now I'm starting to backtest and watching the Zoom calls. I was asking when I'm backtesting, if I find a point of interest and it taps into it, forms the Y curve, everything. But then when I get tapped in and sell the market, if I'm selling the market in my supply zone, but the TP gets hit in the Asian session, how do I avoid it to come to Asian session?
Okay, look, this is I say this time and time again. This is the approach with the Asian session. If you're entering the market at 8 o'clock, don't enter the market.
In the backtesting too, if it's when I'm backtesting.
This is what I say. I say trade like you backtest and backtest like you trade. So if you're entering the trade when you're backtesting, like you know you wouldn't enter the real life market, what's the point of entering the trade? You know what I'm saying? So with the Asian session, the way you approach it, if you enter the trade after like peak hours, for example, after New York session, ideally you shouldn't be entering the markets.
Okay. Even if it hits the point of interest that
unless it's like US 30 that moves nice in the evening. For Forex pairs, I really don't recommend trading after New York session, because what's going to happen is you'll be shown floating profit, and then Asian session is probably going to come take out that New York liquidity, especially if you're entering after New York session. So what I recommend is take each session for what it is, and holding a trade from New York session through Asian session is not a problem. The problem is, guys, holding throughout Asian session isn't the problem, guys, yeah? If you got a good entry, it's fine. If you got like an entry all the way at the top and you're selling, and an Asian session comes, Asian session will probably just retrace up until here and then carry on in the same direction after, yeah? And then once London opens, it will take out the Asian high, come take out the Asian low, and then continue down. But the problem is on a funded account, that's going to now take out from your daily drawdown. If you don't know about daily drawdown, go on the prop firm websites and read about it. My Forex funds, take a look at it. For example, if you have a 100K account, I mentioned this on every Zoom call, but I'll mention it again, it's fine. If you have a 100K account, you can't go below, if you have a 200K account, you can't go below 10K in 1 day. You can't go below 5% basically. You can't go below 10K in 1 day. So I've now got a 200K account and I'm placing a trade. And let's say I'm up 10K. I'm up 10K, enter New York session, Asian session comes now. I hold throughout the Asian session, I'm sleeping. I wake up, that trade from the moment Asian session started, that trade has now gone down by 10K. I haven't lost any money, but the 10K that I was in profit has now gone back to 0. So I'm back on 200K. I have now lost my account, because in the prop firm's eyes, it's like, cool, you was floating 10K profit. Why didn't you move like a professional trader? Why didn't you secure some profit? Especially after you knew the drawdown rules, you try to risk and say, yeah, let me just trade for profit, basically. It doesn't work like that. If it was on a personal account, it's fine. You can hold throughout. There's nothing wrong with holding throughout Asian session, as long as you have the correct entry from a very, very low point or from a very high point. But on the prop firms, that's why I say don't hold throughout Asian session. Don't trade Asian session is universal. Prop firm, personal account, don't even touch the Asian session. But holding for Asian session is a different subject. You can hold on your personal account if you have a big personal account only, and if you're on a prop firm account, close, just day trade it basically.
I got one more question. When you were doing your analysis, I think it was gold. You said when you if the price respect an area, when you say it's respect an area, you put 2 zones, I believe, or 3 zones. If it respect this area, do you mean if it forms a Y curve distribution or accumulation in that area?
Yeah, and it changes character.
And then
yes,
in that way it respects the area.
Yeah, so as in you only know if it's respected if the order block is valid.
Yeah,
so it forms what you're looking for. Y curve distribution accumulation. It changes character. It leaves behind a POI like an order block. It taps into it, then it carries on. That's how you know the area is respected now.
Jazakallah khair.
No problem. Does that make sense though? Yeah.
Yeah, 100%.
Let me know if you need help with anything else. Yeah.
100%.
Yes, guys.
Someone could N on the thing, but they could just keep showing their hand, and we require you to show your face if you want to be on the call. or ask a question.
Wait, is it the face not showing?
Yeah, it's just a hand. They have been waiting a while, but I thought they would show their face later on. So I'm just waiting for them to do that. But I'm not sure if it's they have the camera on. I don't know if you can see it.
Okay, unmute them, and if they're on any craziness, just kick them out straight away.
All right, cool. Yep. Okay, so Fim, I thought so. Yeah, go on.
Hello?
Hi.
Hello?
Can you hear me?
Yeah.
Yeah, and I have a question. You said that Euro USD minimum stop loss was 10 pips, right?
On any pair, yeah.
Yeah, so when I'm trading gold or US 30,
Maximum stop loss, sorry, yeah?
yeah, I'm sorry, maximum stop loss. So when I'm trading gold or US 30, what's the maximum stop loss on that? Because I don't think 10 pips works on that.
Yeah, so you have to adapt. For example, you have to look at what 10 pips is on gold or what 10 pips is on US 30. And you have to remember also, you can't force a 10 pip stop loss. Sometimes, we say ideally, we look for a 10 pip stop loss, okay? If the stop loss is bigger than 10 pips, that just means you have to lower your lot size and make sure you're not risking anything above 1%. Because you have to respect the market for what it is. In your head, in our heads, ideally we want a very, very low risk, like minus, like 10 pips maximum, yeah?
Yeah.
But we have to understand at the same time that the market doesn't always offer us those low levels of stop losses unless we're on a very, very low time frame.
Yeah, okay, thank
You
you.
have to be realistic at the same time.
I have another question.
Yeah.
Can you see a whack of accumulation in every higher low and on a supply zone and a whack of distribution? No, wait. Can you see a whack of accumulation in higher low and up to a supply zone and a whack of distribution on lower high?
You can see it, but we don't take it because that will be in the middle of a chart. We don't consider Wyckoff it's the same analogy I gave earlier. You don't consider Wyckoff in the middle of traffic. Like, for example, in a range and market, price would definitely be accumulating. If price is consolidating, price would definitely be accumulating or distributing. However, we understand there are a lot of traders that are in the market in these levels of congestion.
Okay.
So we avoid it. So we only look for Wyckoff at the top or at the very bottom.
Okay, thank you so much.
No problem. Does that help though, yeah?
Yeah.
No problem. Okay, guys, we're going to take one last question. Please respect it because we've been on here for 2 hours. Then I'm going to answer questions that anyone's got about the event. Then I'm going to call it a day, okay? I've got a lot to do. I've got to clean the house, got to do the dishes. Couldn't get any cleaners today. Hey, it's a lot. Back pain problems. I understand what Mom's been talking about all these years now. You get me?
Yeah, assalamu alaikum, you.
Work the dishwasher. Sorry, yes, bro. What's going on?
Yeah, how are you?
I'm alright, bro. How are you, man?
Alhamdulillah.
You look so different, man. I still can't.
Yeah, bro. I regret counting, but for the sake of Allah.
Come on, man. You got the 3 du'as, my boy.
Of course. Yeah, I was gonna ask you, how long do you think prop firms would be like a thing? Because, do you think prop firms would be like, does it have like longevity? Do you think it would be a thing?
Yeah, like FTMO definitely got longevity. My Forex funds definitely entering that bracket as well. But we don't really like. What's the point? That's why some of these TikTok guys saying, yeah, the guy's trading on a funded account, It's not even a regulated broker, man. You know these saddles that sit in their room and they've been trading for 10 years and haven't found success, so they start hating on young guys that have blown up. These people like that, they're so focused on regulation to the point where they miss opportunities.
Okay.
Like, if there's an opportunity in front of you, take the damn opportunity. Yeah, bro.
Okay.
Forget being, regulation savvy. Utilize the prop firm, forget prop firms, whatever's in your life. Sometimes an opportunity might leave you because you're too focused on the logistics. Stop being focused on the logistics of things because the train will leave you. Jump ASAP before takeoff. So utilize the prop firms, withdraw from them, put that money into your own personal account, and slowly start growing your own personal account that way.
Okay.
Looking for regulation, trade with FTMO.
Okay, inshallah.
FTMO,
yeah, you answer my question.
They're regulated by the Financial Conduct Authority, so you can trade with FTMO.
Okay. Yeah, thank you. That's what I was gonna ask another question as well. Do you trade all 5 days, or do you only trade when you see a setup? Like, do you have days where you do not trade at all?
If I go to Sunday market and I'm trying to buy the best bananas, I'm in Walthamstow, market opens 8 a.m. but I get there 4:30. I'm left with the bananas that got acne.
That's true.
You know what I mean?
Yeah.
So sometimes just because a market's open, it doesn't mean I'm gonna get what I want from the market.
Yeah.
I don't know how I come up with these. I'm sorry, guys. Sometimes it's bizarre.
You know, you got good analogies.
No, I just described acne on a banana, bro. That's not a good analogy, but you know what I mean?
But yeah, I get what you mean. I get what you mean.
Oh yeah, cool. That was the last question, guys. Please, Saleh, just yeah, don't unmute anyone else. That was all the questions done. Any further questions, just ask in the Discord questions tab and you'll get a response. So now, the event, as you guys know, for those of you guys who wasn't on the last Zoom call, we've been mentioning this, get there early to find parking. The venue's not gonna have enough parking for everyone. So you're gonna have to park on side roads and stuff like that. Get there early. If you don't have a ticket, please do not turn up because you will not be let in. No matter how you smile at me or what eyes you give me, it's not gonna work. You know, I'm not the guy at the door, okay? I'm not the guy at the door. Yeah, come smart casual. Smart casual does not mean trainers, etc. You know, come looking professional. You don't have to do too much, but whatever you'd wear to a job interview, take it as serious as that. And yeah, man, take yourself seriously, look presentable, because when you dress good, you feel good. When you feel good, you know, you yeah, you need, yeah. So what you need to bring is your laptops, chargers. We're gonna try and provide plug sockets, like, yeah, Saleh, we need to buy a couple of those extensions, yeah, extension cables. Yeah, so that's notepad, pen. That's about it. That's what we need to bring. And yeah, that's it, man. Yeah, that's it. That's any other information, Saleh, that we need to say?
From what I remember, there isn't parking on the actual site, but there is parking around the general area. So if you can find, usually in London, if you can find a single yellow, you can park on that. But please, like, obviously pay attention to the signs and stuff. So that's it, really. And just get there on time. I think there are quite a few people coming from far out, so they're quite worried, oh, if I get there like late, am I going to miss anything, etc. But we usually give some time for people to come in.
So come at 8:30 so you can get some good seats. Okay. Yeah. Come early if you want good seats, because remember, it is 250 people. So if you come late, you're sitting at the back. That's the only seat that's going to be available for you. So yeah, that's about it from me. Hope you guys benefit from the call. If you guys benefit from the call, leave a message in the Discord to motivate others that don't really join the call to join the calls. And yeah, if you guys can leave a review in the reviews tab, we'd really appreciate it as well, man. That's the only thing we'll ever ask for. We take out time for you guys as well, guys. So that's the only thing we'll ever ask for is a review. So if you can kindly write a review in the reviews tab, I'd highly appreciate it. And I'll see you guys next week where we're going to do the market breakdown Zoom call at the live event. And that's the only thing that's going to be recorded. Like, I'll be on Zoom doing the market breakdown. So for those of you guys that can't make it to the event, don't worry. We'll do the Zoom at the event, but it's going to be very early, okay? It's going to be early, but we'll let you guys know the time beforehand anyway. Take care, everyone. Hopefully we'll have a lovely day. And don't worry, for anyone asking, the call was recorded. I'm going to upload it. I'm back in the country now. There's no 7 business working days anymore, okay? Don't worry.